Manish Sonthalia, who's joining us now to take some questions. Is of course with Motilal Oswal Financial Services. Manish, great to have you with us here. Thank you very much for your time. How are things looking, Manish? The waters have been muddied a little bit with all that is happening globally, although markets here have corrected very aggressively as compared to global markets, even though the problems have not emanated from here. What's your perspective on things now?
Yeah, so I think incrementally, inflation has become a bigger concern now, and obviously corporate defaults, bank defaults, they are a more worrying point from an Indian market point of view as well, the global market. So I think, markets are not going anywhere. I would believe that they are broadly going to be sideways, let's say plus minus 500 points on the Nifty is what the markets will see over the next 6-9 months. I think it all boils down to how the earnings shape up, and value style will be in greater focus than growth style.
Hi, Manish. Always a pleasure having you on the show. So, that's quite a statement. 500 points plus minus, and that's how we spend the year. And I completely get where that's coming from, right? Even before these global issues and this turbulence came upon us, we were busy discussing how the third quarter earnings season is seeing downgrades and corporate earnings aren't exactly burning up the charts. So how do you see the domestic setup play out, X of whatever's happening around the world, whether it is inflation, monsoon, and could that become, again, a bigger concern for the market?
Yeah, so I think, it boils down to where the earnings growth are going to come from and how the valuations on those particular sectors shape up. So having said that, I think if you look at where the earnings growth is going to come from in 2024 fiscal is broadly going to be technology, banks, and automobiles to some extent. And there is where you have even the valuation comfort. You have seen the massive correction in, let's say, the technology names, the banking names. But this is going to leave the mantle on the earnings growth front. So the biggest comfort comes from these sectors only. And obviously, since the valuations are comfortable on these sectors, these would tend to broadly outperform the high P stocks, or let's say the richly valued stocks. And since inflation is going to be headwind for the next 6-9 months going into FY24, I would believe that there's going to be, again, concerns on margin pressures, as far as things are concerned. So I think, one should focus on how the valuations shape up in individual names and in these sectors, and there is where the relative performance is going to come from.
All right, Manish, just to clarify on that point, do you believe that it's a good time to get into IT? Because, when we were chatting last, we were saying it's giving signs that it's bottoming out. So good time to get into IT? If yes, will you get into the large cap names or the mid cap?
See, I think within the next 2 quarters, I would believe that mostly all the negatives of the IT names would get priced in. It's a great time to buy IT, when particularly the sector has seen some very decent correction over the last 1.5 years. And, there is absolutely no interest. So the sector is seeing a lot of disbelief as far as the earnings growth trajectory on FY24 numbers are concerned. So, I would believe the sector would broadly see a high single-digit sort of constant currency growth in FY24, and again back to double-digit constant currency growth in FY25. Margins are going to be accretive from where we were in 2023 fiscal, and cross-currency, which was a headwind in FY23, will likely become a tailwind going into FY24 and 25. So from that point of view, I would believe both IT and pharma are great buys at current levels.
Manish, we had S. Narain of ICICI Pru yesterday. You mentioned that you expect value as a style or as a group of stocks to do better than growth. He left us with the thought that, and he's a contrarian, a little early. He said value has done very well, and now we are watching for signs that growth starts to pick up. I mean, as a style, as a group, starts to pick up. Maybe now is the time to start getting in when things are still looking pretty bad for that segment. I don't know how you think about that.
So I think, the whole point is that if inflation is going to be a concern on margins and obviously the headwinds coming out of Western world in terms of corporate defaults, etc., how growth style is going to be in focus for the next 6-9 months remains a challenge. And I would believe that is continuation of the value style, which is likely to, be in focus for the next 6-9 months at least. And it all boils down to how the earnings trajectory in FY24 on the benchmark Nifty is likely to shape up. Every year we start with a 20% assumption on growth, and then it gets boiled down to, let's say, 10 to 12%. Even for fiscal 23, started with 20% earnings growth, but it will boil down to 12-13%. So I would believe, it's going to be the value style which is going to continue in focus. Commodities might make a comeback thanks to inflationary pressures. This is one ignored sector, totally ignored sector, but this could have a repercussion on the high P names, particularly the consumption.
Manish, why are people selling banks so much? I mean, we know that there's no connection whatsoever between global issues and India. Is it just undoing yesteryear's or last year's great performance? Or is there anything else that comes to mind? And how are you approaching it? Because there's a severe correction. PSU banking index is down 14-15% this year. Bank Nifty itself is down 7-7.5%. Are you using the dips to buy more, or is it time to sort of lighten position, you'd say, and take profits?
No, so growth is not going to be the same as we saw in 22 and 23. Margin compression will happen because deposit rates are going to move higher as we move into Q1. And valuations, at least the known large cap private sector as well as State Bank of India, are broadly full. That is why, since a very heavy weight on the index, people move to the PSU bank. But now they have their own set of challenges in terms of shoring up capital, etc. So we have seen some broad correction. I think, it's got to do with the overall ownership of the sector that we are seeing in spite of decent earnings growth over the last 1-2 years. We have seen some massive correction out here. But I think even if we assume a trajectory of, let's say, 15% sort of earnings growth, not those 40-50% earnings growth that we have seen in 2023, valuations have become even more sanguine. And with the passage of time, the valuations are only going to become cheaper because growth starts to get priced in for fiscal 24 and 25. So, I would believe it's likely to remain an overweight sector for FY24 at least, even though earnings trajectory would be not as strong as we've seen in fiscal 23, but still it's going to be very decent and in line with or slightly better than what the total index, which is Nifty 50 earnings growth, is likely to shape up for fiscal 24. So I would broadly be a buyer on dips in the banking space, but more so on the private sector banking names as opposed to PSU names. In the PSU names, only State Bank of India.
All right. Manish, you were daring enough, so to call it, that you like something that one of these new age companies, Zomato, that was falling. But you said most of the bad news is in the price, but you're also studying other companies from the new age teams. Case in point, maybe the Paytms of the world. Are you still interested in that space? Is there one of those companies that are still looking up besides Zomato?
100%. So both Paytm and Zomato continues to be, our names that we have in our funds, etc. And we continue to like those names, given the growth, trajectory and visibility of profitability, both for Zomato and Paytm. And obviously, sometime into FY25, we are also likely to see positive PAT, as we see things, given the growth in both these names. So we continue to like them. And if we see further dip in the prices of these two stocks, we'll be happy to buy them even more.
Okay. All right, Manish, then we will wrap up the conversation today on that note. Thank you very much. Always great getting some perspective with you on the markets and a lot of the sector.